Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Invesco's QQQ equity ETF strategist, McCormack, to recap year-to-date performance and the Qs, the ETF that tracks the Nasdaq-100. Ryan, it's great to have you with us. Welcome to Trade Talks.
Thanks so much, Jill. It's great to be here.
All right, and let's take a look into our first chart here where we can take a look at year-to-date performance on the Qs.
Yep, going into our weekly check-in, QQQ year-to-date up 11% versus the S&P 500 down 3.83%. So for the most part, we've kind of been just around that 15% outperformance now for a number of weeks, and pretty much held firm this week as well.
And I think if we look at our next slide here, this is what's equally as impressive as the market cap that we're seeing with the Qs.
Yeah, so I think we spoke on May 6th. We celebrated a milestone where QQQ closed above $100 billion in AUM, and as you know, QQQ is the 5th largest ETF in the U.S. But I think what's interesting is that it's been a very nice combination of both performance, obviously with the fund up 11% for the year, but also inflows. So the May inflows came in at just over $4 billion, which marks the 3rd consecutive month of $4 billion plus in inflows, which hasn't happened since October, November, December of the year 2000. So pretty momentous in terms of flows. As of the end of May, according to Bloomberg, we were over 13 billion in inflows for the year. And I think as you look at that, investors are not only enjoying the outperformance that QQQ has delivered for the year, but beyond that, I think they're recognizing the value that QQQ and its innovative companies provide.
In our next chart over here, we can see sector returns. Not too shocking to see that what makes up the Nasdaq-100 is leading the way here. Yeah,
so I think with sector returns, I mean, for the week, QQQ is up 2.85% versus the S&P at around 3%. It's a similar story from last week, but a little bit more muted in terms of S&P's outperformance for the week. I mean, very close to neck and neck. But you look at those sectors that have led, and it's financials, it's industrials, it's utilities, healthcare, real estate, materials. These are the sectors that, for the most part, QQQ is either underweight relative to the S&P 500 or has no exposure at all. And I think it's very similar to last week, where investors are looking for sectors that have been beaten up by COVID, looking for names that are on sale, and that's why you've seen these sectors all return greater than 3% for the week. Beyond that, if you want to look down into individual holdings, it tells a somewhat similar story. QQQ did have a number of contributors that were very positive for the week. You have Apple and Amazon in there. Tesla, after its launch, or successful launch over to the International Space Station. Regeneron, after Sanofi exited its stake. And then Zoom, which blew out earnings, kind of unsurprisingly, given this huge work from home environment and how often we're using Zoom, much like you and I right now.
Right now, yeah.
And beyond that, when we're looking at SPY, kind of the largest contributors to that fund, or the S&P 500's performance for the week, it does continue to paint the picture that investors are moving towards those laggards, right? Those beaten up sectors, those beaten up names. So you look at sort of historical blue chip companies like Procter and Gamble, like Merck, like Exxon, like Berkshire Hathaway, all of them in very positive territory for the week. But as you look at a year-to-date basis, all pretty much laggards. So again, investors looking for things on sale, kind of going bargain hunting, and I think that's where we're seeing some of the attention in the S&P 500.
Ryan, that's a good point that you bring up, where you're looking at that rotation. It sounds like it's more of a trade going into these beaten down names, looking for some value, perhaps. Although value can be relative when you look at some of the stocks that have been being bought. But from a longer term perspective, it seems as if investors still really believe the technology story. What brought the market back is what's also going to lead, as you had mentioned before, with the work from home environment and a new appreciation for being at home. It seems like the technology companies are going to be the longer term, the modern day industrials at the end of the day.
Yeah, that's a great point. I mean, I think it's very clouded at the moment when you're looking at, let's look at future earnings, considering so many companies are just not issuing guidance, right? There's so many external factors, whether it be the election, whether it be COVID, which the impacts of that are really the reason why they're not issuing forward guidance. But, as we've talked about in previous weeks, I think investors, again, are recognizing the value and what some of these QQQ holdings have said in their earnings calls and from their executives, that they are well positioned to take on this big, transformative shift in the way that we do business with these vast work from home scenarios. And I think looking at Zoom earnings was certainly a step in that direction.
All right, Ryan, thanks for joining us as always.
Thanks, Jill.
All right, and thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.